So we are doing preparation for our A-level exams. It's May June 2015 paper 41. Okay, over here basically we are asked to prepare our income statement, our statement of changes in equity, the retained earning columns only. And this is one thing which is important. It's the property, plant and equipment schedule. They've also asked you to prepare the budgeted statement of financial position. Let's start with the first thing that they've asked us to prepare. They have asked us to prepare a budgeted income statement. For which year? For 2015. We are already being given an income statement of 2014. If you look over here, we are already given income statement of 2014. Retained earning columns, extract of statement of changes in equity is already given, but of 2014, and statement of financial position is given for 2014. They have also given us the format of the income statement, that is revenue minus cost of sales gives you gross profit. Then you have minus the administrative expenses minus the distribution costs. You will get profit from operations minus add the other income from investments minus the finance cost. You will get profit before tax minus the tax. You will get the profit for the year. This is your income statement of 2014. And then they are telling you that you prepare the income statement for 2015. Based on the income statement that has already been given to you for 2014, you are to prepare an income statement for 2015. But for 2015, they have given you budgeted information. With the help of that budgeted information, you are to prepare income statement for 2015. No worries. First information is my revenue is expected to increase by 4%. So this is of 2014. I am to prepare for 2015. Revenue is to be increased by 4%. So I will take 756,000 into 104%. So it becomes 786,000. 756,000 into 104%. So it will become 786,240. They are telling make all calculation to nearest thousand. So you should be mindful that whatever calculation you are doing, it should be to the nearest thousands. So this increasing, so it will become 786,240. The nearest thousand would be 786,000. So I will take all answers in triple zeros. Information about revenue is done. Then they are telling my percentage of gross profit to sales is expected to increase to 42%. Okay, so gross profit to sales is expected to increase to 42%. That means they are telling gross profit is 42% of sales. If I say gross profit is 42% by sales, that means 42 by 100 over 76,000. So 786,000 into 42%, it is going to give me 330,120. I have to round it off to the nearest 100, so it will become 330. So my gross profit will become 330. So my cost of sales will become how much? 786 minus 330. So it will become 456. So my second adjustment is also done. Now they are telling the distribution costs and administrative expenses both are expected to increase by 3%. So this will become 103%. So my distribution cost would be 96,000 into 103%. It becomes 98,880. I have to round it off to the nearest 100. So I will make it nearest 1,000. So I will make 99,000. Administrative expenses are also expected to increase by 3%. So I will do 180,000 into 103%. 180,000 into 103%. It becomes 185, 400. I have to round it off to the nearest 1,000. So the nearest 1,000 will be 185. Now, this is my gross profit. Gross profit minus distribution costs minus administrative expenses. I will get my profit from operations, which becomes 46. Income from investment is not expected to change. That means income from investments would remain the same. It's 5. Finance cost is expected to decrease to 10,000. So this will decrease and it will become 10,000. So 46 plus 5 minus 10. 41 will become my profit before taxation. The tax rate will be 20%. So 20% of 41. 41 into 20%. It's 8.2. I have to round it off to the nearest 1,000. So my tax will become 8. So what will be my profit for the year? My profit for the year will become 33. So this all the adjustments were related to prepare the budgeted income statement for 2015. So this is how my budgeted income statement would look for 2015. There are two things to note over here is you have to round off to the nearest. You have to round it off to the nearest 1,000. Okay. Now the second thing that they want you to prepare is they want you to prepare budgeted statement of changes in equity, but only the retained earning column. Retained earning column. You have been given the statement of changes in equity for 30th September 2014. You are supposed to make it for 30th September 2015. So if I'm talking about my retained earnings, I will have the balance on 1st October 2014 as 30,000. This is all in 3 zeros. From this, what do? You add the profit for the year. You will minus all your dividends that is paid, interim dividend or final dividend. If there is any transfer to reserves, you will minus from the retained earnings. And you will get the balance on the last date. So balance on 30th September 2015. You will get that. You've already calculated the profit for the year. The profit for the year is 33. Let's look about dividend paid. They say that no dividends are expected to be paid on the ordinary shares during the year. But there is proposed dividend 0.10 per ordinary share that is going to be paid on 31st of October 2015. Due to be paid on 31st October 2015, that means after the 30th of September. So this dividend will not come. This dividend will not come. See if there is any preference dividend. See if there is any preference dividend. Do you have any preferences? Look at the question. There is 5% non-redeemable preference shares. And preference shares are always supposed to be given dividend, whether it is mentioned or not, at a fixed rate. So 5% of the preference share dividend, it will become 5,000. So you will pay this dividend out of the retained earnings. If you do not show it as finance cost, you can minus it from the retained earnings. The dividend paid on the preference shares is 100,000 into 5%. That is 5. There is no transfer to reserves, but there are certain capital expenditure. There is certain depreciation. Okay. And there are some things that have been changed in the current assets and current liabilities. So your retained earning columns balance on the 30th September 2015 will be 30 plus 33 minus 5. This will become 58. Now the next thing that they've asked us to make. What have they asked us to make? Prepare a property, plant and equipment schedule. And this is really very important. You have to prepare a property, plant and equipment schedule. How do you prepare that?